Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, accounting for the money supply, M1 and M2. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So we follow the price of Bitcoin fairly closely on this channel. You guys know I'm a big fan of Bitcoin. And one of the things that I wanted to discuss is measuring it not just against, say, its USD valuation, but looking at it relative to the money supply. Now, if you're familiar with my most recent video on the stock market, we looked at the S&P 500 relative to the money supply M2. Okay, that's something we just looked at yesterday. But in this video, we're going to go through the same exercise with Bitcoin, and we're going to look at M1 and M2. Now, you might not know what M1 is, so I'll give you a brief definition. You could Google it and find more information if you really want to dive deep. But M1 basically it just includes coins and currency that's actually in circulation, right? So in circulation, it could be checkable deposits as well. Whereas M2 is a function of M1. It includes includes M1, but it also includes things like in your savings accounts and in, say, certificates of deposits or CDs. By the way, CDs are not often used, I think, especially by millennials, because we've had all the incentive in the world to just go risk on for the last decade or so. But now that the Fed funds rate is going higher, it is at least worth looking into, especially if you want to try to protect some of your capital when you're very unsure about what's going on under the current macro conditions. So you could always take a look, and I think you can get about 4% at some banks. So that's actually going higher as the Fed continues to raise interest rates. But this is the chart for Bitcoin. Okay, you guys know this chart. I'm sure it's near and dear to your heart. You've probably studied it more hours than you can remember. This is the valuation against the US dollar. But we know, right? We know that the money supply goes up as a function of time, right? Basically. I mean, if you go look at say M2, you can see it has leveled off a little bit recently, but over the long haul, it generally just goes up as a function of time. And yes, it is leveled off a little bit. Arguably, it's just a reversion to the mean. So if we were to sort of draw a line through this data set and say, well, and maybe we should just take it from over here. That way it fits a little bit better. If this is sort of the growth rate of M2 in general, you can see that what happened in 2020 with our Black Swan event really shot us up a lot higher. And now one could argue that we really need to be going sideways or down until we more or less get back onto this this yellow trend line that I drew through the data, which could take until 2024, and then we could hopefully see another phase of economic expansion. But right now we have to fight high inflation, so it just is what it is. We don't control what it is. We just have to recognize what it is and then plan for it. But this is M2. Now, if we look at the valuation of Bitcoin against M2, you'll probably remember we talked about this many times in the past. And actually, if you remember back to mid 2021, I think like on the day that we had the bounce, I believe I made a video where we talked about how, right here, a lot of people were calling for it to go to 20K back then. And for full disclosure, I thought there was a decent chance we could go to 20K back then. The receipts are there. I mean, I even said, I even speculated that we could go to 20K and then bounce back up, but we didn't, right? I mean, we did not go down to the 200-week moving average back then, although it was a distinct possibility. And I mean, in hindsight, being overly bullish at the time, while it did work out in the short term, you could argue that there was more compelling evidence to be bearish, right? But regardless, we did get that bounce off of that level, and that level actually corresponded to the 2017 all-time high. Okay, it actually corresponded to the 2017 all-time high. So while you could argue that, I know there was some train of thought that we would go back down to the all-time high when you don't account for M2, right? We never actually made it there during the summer 2021 correction, okay? And if you remember, we called for a 3 to 6 month bear market followed by new all-time highs, which is more or less what we got, but the all-time highs were relatively lackluster rather than going much higher. So if you go look at it compared to M2, where are we today? Because we know we're below the prior all-time high. I mean, hell, if we were already testing the all-time high relative to M2 back in the summer of 2021, and we're now at 19K, we know we're below it. And in fact, if you draw a line across, guess where we are? We're at the 2019 all-time high. That's where we currently are. Okay, so we found support here with respect to M2 back in the summer of 21. We're finding a little bit of support right now at the 2019 all-time high. Okay, that doesn't mean it's going to hold forever. I mean, I think it's important to be open to the to the idea of more downside, because if the macro remains bleak and the S&P 500 continues to put in new lows, I mean, Bitcoin's just not going to hold forever. As much as I like Bitcoin, as much as I think it's going to do great things in the future, I mean, right now we're just in a bear market. And so, a lot of people want to talk about, is the bottom in, is it not in? I think it makes sense, whether you believe it's in or not, you have to plan for, for the scenario that it has another leg down, even if it doesn't happen. So it certainly could happen. I mean, I think the next most obvious spot to look at would be another, against the money supply, it could be another 25 to 30% correction from where it currently is. This would actually get you down to the to these levels that we saw back in mid 2018, and then also in early 2020, right before the pandemic drop. But this is an interesting way to look at this chart, and I think it's actually quite useful to measure it this way. Another thing you can see is sort of this all-time, or this local high here, corresponded to what eventually ended up being the bottom. So like what happened in June 2017, and then in December of 2018. And then if you go look at it without the money supply, you can see, if I go to June 2017, it wasn't quite there. So there is some argument to be made that accounting for the money supply, M2, is somewhat useful. Okay, because it gives you a glimpse at potential support and resistance levels that might not be so intuitive, because it's often easy to sort of compare things against the US dollar. And furthermore, I mean, it was also the idea of seeing this double top up here on just the USD valuation. It did go a little bit higher, about $5,000 higher. With respect to M2, it basically went to the same level. Okay. Now, the next chart is probably going to be somewhat eye-opening for you. I've looked at this chart a number of times over the years, and it's the valuation of Bitcoin with respect to M1. So we're taking into account M1. It's still as a function of time, but we're taking into account M1. And again, M1 is referring to the currency in circulation. Okay, so it's not what's in your savings account or in your CDs or anything like that. It's what's actually in circulation that is very, very liquid. Okay, so M2 is less liquid than M1. Okay, so M1 is more liquid than M2. Now, hold on to your hat, because it is a somewhat interesting chart. Okay, so I'll leave this on the screen just for a minute, maybe digest it, think about it, and then we can talk about it. But when you account for the money supply, the currency in circulation, okay, we're at the same level now that we were at if I take this higher, this same level is where we sort of hit a top in June of 2017. Now remember, with respect to the US dollar, this area is nowhere close to where we were in June of 2017. In fact, in order to get to where we were in June of 2017, if I fix this line, in order to get to where we were in June of 2017, it would need to go down another 86%. But the mistake is assuming that the amount of circulating money is constant. We know that it's not. It's an artifact of our monetary policy, is it not? If we're just going to print money, it leads to inflation, right? We're going to have inflation. Sometimes we print more money than we should, and it leads to higher inflation. Sometimes we might not print as much money, and it could lead to fairly difficult times. Or maybe they're printing money, but the markets just don't care because of how bleak the macro is or something at the time. My point is, if you account for M1, we're at the same level now that we were at in June and July, or let's say July, August of 2017. It's kind of crazy, isn't it? I mean, it really shows you that there is an argument to be made that from some perspectives, whether, I mean, again, I say this as someone who really likes Bitcoin. I have Bitcoin, and I do think there's a spot in our world for Bitcoin. I think it's going to do great in the future. But you can't look at this and with an objective stance and not kind of raise your eyebrow at it. Like, oh, okay, well, according to this, with respect to the money supply, Bitcoin hasn't made as much progress as we maybe thought it has made, right? When you just compare it to the US dollar. Because with respect to the US dollar, I mean, it's generally things trend higher just because the US dollar is worth less. It's not always because that asset that you're interested in is worth more. Sometimes it's just because the US dollar is just fundamentally worth less because of the debasement of that fiat currency. So you go look at Bitcoin with respect to M1, and you can't look. I mean, my first thought when I looked at this was, damn, right? Like, wow, like we're at the same level that we were at back in 2017, and furthermore, we're only just above where we were in late 2018. So one of the interesting things that I sort of was thinking about is this has been our primary range, right? Our primary range. And if we were to actually draw, I mean, we're not actually at the bottom of the range, because the bottom of the range would be, I guess, be over here in December. Okay. So that's sort of the bottom of the range, right? This is the top of the range. We've hit it 3 times or 4 times with 1 deviation above it. That was even sort of 2 separate hits right there in 2019. Look at that. 4 perfect resistance levels that Bitcoin hit. At the same time, it also held resistance at this level the first time around. And then we got support on it right here and right here in 2018 and 2019. And then we found some support on it in June of 2022. And now we're hovering just a bit above it. There have been 2 deviations outside of this range. One in 2017, okay? And then one with the Black Swan event that occurred in 2020. Could we have another deviation? We could. Why not, right? I mean, it could happen. If we're going to go back down to the bottom of the range, then Bitcoin would need to correct another 13%, right? Which seems like a plausible scenario. I mean, it's interesting because if you look closely, a lot of times that it goes to these levels, sort of a double tap, right? It hits it once, it hits it again. And then when you go up, it hits it a couple times, right? Once and twice, once and twice. Once and twice, or even right over here, I sort of hit it a couple times. You did have a deviation to the upside. We had a deviation to the downside. This represented a blow-off top that Bitcoin had. This market cycle for Bitcoin, we did not really get a blow-off top. We had 2 separate distribution phases, just like in 2019. In fact, one could argue that distribution phases is the new normal for Bitcoin, right? Like what we saw in 2019. It's interesting because a lot of people look at 2019 as a relatively uneventful time in Bitcoin's life, right? A relatively uneventful time. And I myself often equate it with 2015 because I just think to myself, well, it mostly went sideways, right? Like it mostly went sideways throughout that year, just like 2015. However, we actually saw Bitcoin go up like 4x. It wasn't to the all-time high, so it didn't really make headlines. But when you account for M1, the currency in circulation, we went to the same level in 2019 that we did in 2021 and 2020 and in early 2021 and late 2021. So the main difference between 2019 and 2021, the 2 taps in 2021 here, it's just there was more money, right? That's all it was. There's just more money in the system. Not necessarily, it's not necessarily indicative of anything more than that. If there's more money in the system, the prices go up, right? That's where the memes come from, right? It's like stocks go up. If you're just going to print money into, if you're going to print trillions of dollars in a relatively short time period, you should expect that asset prices are going to go higher. In general, not all of them will. A lot of them won't. But on average, most of them do. And that's why I say like index fund investing is often recommended, is because it's really hard to pick out exactly which stock is going to have the most gains, the most outsized gains. Therefore, if you buy the whole market, you're at least going to get part of that. And then you'll average out to having fairly good returns on an annual basis, occasionally seeing negative returns. But you look at this chart, and Bitcoin hasn't even seen a new all-time high since 2017. But if you looked at the USD chart, you wouldn't believe it. I mean, if you just looked at Bitcoin USD, you wouldn't believe that. I mean, who would sit here and say, like, it hasn't seen a new all-time high since 2017? Of course it has, right? I mean, we went up in 2020, 2021, and even now we're flirting with a prior all-time high, even though we're just below it. You account for M1, we haven't seen a new all-time high since 2017. Okay? So there are these phases, that occur where I think you get up into these sort of range-bound areas, and we can get stuck in these areas for a long time. We can. And I believe we'll be stuck in this range for a while longer. My guess is that Bitcoin could easily have more bull runs where it goes to new all-time highs, but, we could easily be stuck in this range. I mean, let's think about it like this. We've been in it since 2017. And it's now 2022, so it's been 5 years already. We could easily be in this range for another 5 years, okay? Doesn't mean that you can't make money, right? I mean, it doesn't mean that. I mean, if we go back up to the top of the range, this is a 256% move with a constant money supply. Imagine if M1 goes back up, it would be even more because it's relative to M1. We could easily be in this range for another 5 years. We could see deviations outside of this range for a long time, okay? But eventually, I do imagine we will sort of break out of it. But the market is sort of digesting this. And if you think back to the .com bubble, it took a long time, right? It took a long time for us to really work our way back up and to really get back in business. Now, it didn't mean you had to wait all those years. You didn't have to wait 10 years to make money. If you go look at, say, the NASDAQ, you would have. It's not like a lot of people look at this chart and say, well, once the NASDAQ hit this all-time high, it took 16 years to see a new all-time high. My response to that is, who cares? I mean, as long as you, like I've said the entire year, or most of the year, really since like about January, February timeframe, cash is king this year. As long as you recognize that, and you're not just YOLOing, and you haven't just YOLO'd all your money into the market every bear market rally on the way down, then you don't really care so much. Because if you start investing even in this area, you're going to be making money well before we get to a new all-time high. It's my same argument with crypto. Yeah, it kind of sucks during a bear market. It does. I was hoping the bull market would extend longer, but we had to pivot our stance and say, look, cash is king in 2022. It just is what it is. Don't fight the Fed. The Fed's raising interest rates. We're going forward with QT because of high inflation. Inflation's sticky. It's not coming down as quickly as we might like. Therefore, asset prices are likely going to come down. And I can't help but think this for crypto, this is our .com bubble to some degree, right? I mean, it doesn't necessarily mean it's going to take this long to see new all-time highs, but it's our .com bubble, okay? And a lot of people don't like that when I say that, right? I've put out 2 videos now, maybe 3 videos where I talk about Bitcoin or a cryptocurrency, the worst case scenario, where we compare it to the .com bubble. I think the first video we put out on this was back in February because it was in reference to the .com bull and the crypto bull and the similarities between the .com bull and the crypto bull and how it was representing sort of max hype, and what came after it was a lot of pain. So we talked about it in February. We talked about it a few months ago. I'll briefly touch on it here. I'll do a full dedicated video on it here and again at some point in the next few weeks. But I don't look at these charts and get upset. I look at it as like, oh, wow, these people had so much opportunity. We don't get these types of corrections that often in financial markets. We don't. So when they happen, it's important to take advantage of them. Not to just tune out of the markets until you get to a new all-time high. Because if you did, you would have missed all these outsized gains in the way to the all-time high. Okay? So just consider that. Now going back to Bitcoin, and I'll just sort of wrap it up here. I'm not going to take up all your time. I know I've been going on a little bit too long, and no one wants to hear me talk forever. But going back to Bitcoin and M1, again, a 13% correction gets you back down to where we were in late 2018, the market cycle bottom. If we go back to where we were in May of 2020 and we deviate that far down, it would be about another 47% correction. Okay? A 47% correction for a constant money supply would get Bitcoin down to just over 10K. I'm not saying it has to go that low. I'm not, and I'm not saying, I'm not planning on it necessarily going that low, but that's what it would go to if we went down to the levels right after the pandemic started. Okay, that would be the level. It would be about another 46-47% correction from the current level if we were to have a deviation back down to that level. There's no guarantee we have a deviation back down to that level. The only way we have a deviation back down to that level is if more or less we're repeating the pop after the .com bubble, which is a possibility. And I'm not going to sit here and blow smoke and say these things can't happen, because they can. And these are important considerations for you as an investor to make. It's not about, I don't really think it's about being right or wrong. I just think it's about managing your risk and recognizing various possibilities and trying to plan for one possibility, but also hedging for the other possibility. I think that's the way you navigate these markets. I look at this right now for Bitcoin against, with respect to M1 and say, yeah, like there could be some more downside in the short term, but I'm still very bullish on it long term. And I think to myself, does it come down here and then go back up? Does it come down here and then go back up? I don't know. But for my own personal convictions, I think it will go back up after the Fed gets inflation under control. Okay? And maybe not immediately after. I mean, we have to get inflation back down, and we have to get to a point where where the economy is doing well again and the macro doesn't look so bleak, and we don't have as many supply chain issues. Once we get back to that, I don't know how long it's going to take, but I am happy that the Fed's raising interest rates. I know a lot of people are not. My opinion on that is, as an investor, the mantra, right, is just don't fight the Fed. If you don't fight them, you're planning for these scenarios, right? Like higher interest rates mean you can earn more yield on boring things like certificates of deposit in the short term. And if you're cash heavy, if you treat cash as king in 2022, then this is kind of what you want, right? It's all about planning for these scenarios, not fighting the Fed, right? Don't fight the Fed. So I don't know exactly how things are going to resolve here over the next few months, although you guys know I am prepared for lower lows. I think with the S&P 500, the NASDAQ, and the Dow Jones all putting in lower lows, it seems like it's only going to be a matter of time before Bitcoin does as well. But either way, I think we have to ultimately prepare for the next bull run in crypto, which might, it still could easily be not until 2024. Okay. Normally, if you're just talking about what history shows us, you get a bear market year, you get a sideways year, and then you start the bull market, right? You get a bear market year, you sort of get a sideways year. Although we know with respect to M1, it wasn't just a sideways year, right? It was actually a fairly great year. It went back up to where we ended up going to in 2021. And then you get your bull market year. Now we're in our bear market year. What normally comes after? The sideways year. Okay, that's just what normally happens. So, but what normally comes after that, right? The bull market year. So I think you just need to be patient. Recognize that these things are going to take a long time to play out. Maybe go look at the valuation of Bitcoin against M1 and M2 and really digest what's going on and what it means for you and how you want to navigate the market. Again, this is not financial advice. I just want people to try to understand things in these markets from a different perspective, right? It's nothing more than that. If you guys like the content, make sure you subscribe to the channel. Give the video a thumbs up. It really does mean a lot that you guys subscribe and like the video. Remember, I'm not even running AdSense on these videos. Not a single time in history. I don't post affiliate links. Okay. I've said before, this stuff is not worthwhile to me, right? Like I don't want to do that kind of stuff. I never have I done a paid promotion, right? No paid promotions, no affiliate links, no AdSense. So please subscribe. Just trying to help educate people on financial markets. And at the same time, I'm learning a lot myself. Okay, I am learning a lot myself, sort of figuring it out as I go. But I just want people to get through this phase, because I do think that the next phase of economic expansion, the people that can kind of survive through this phase will have the most to gain. If the market sort of chews you up and spits you out before the bear market is over, then then you just simply won't have the same opportunities I think, as investors who sort of weathered the storm and sort of planned for it accordingly. Thank you guys for sitting in. Again, subscribe. We also do have a free Into the Cryptoverse newsletter. You can find a link to that in the description below. And every single month, we allow one person to get a 1-month subscription for free. We just pick them randomly. They get a free 1-month subscription. So make sure you check that out at the very least. And you can find a link to that in the description below as well.